Good morning, everyone. Happy month end. Hey, how's it, Cisco? What's up, Johnny? How are things in the South Pacific? You got a bit of a delay on the stream. Sorry about that, Johnny. It's a good thing the market's moving slow. Hmm, Another new high tonight. How's everybody doing? It could just be YouTube. Hey, Shanghai, how you doing? Good morning. Good morning. Welcome to the folks joining us on YouTube. Hey, Lonigan, what's going on? Hey, Raj. Here we go again. Little month end short squeeze. Hey, Dan. Hey, what's up, Dave? Yeah, month end, quarter end, and tomorrow is market maker month end, which is the last trading day of the month. And let me go. All right. I've had the weekend off. I got weekend brain, so I'm warning everyone. Here we go. Here we go. Overnight inventory. It's about 98% long. Okay. And in the little video I put out yesterday before the Globex Open, I'll do a month end, quarter end update. I'm going to include some stock symbols and thoughts on the next quarter. But I said we have two scenarios. One was down and trade within Friday's range. The other one was to get outside of Friday's range. And these would be the levels we're looking at. And that's what's going on. Hey, Mother Truck, what's going on? Hey, oh, what's up? Yeah, so inventory's underneath us. Last minute shorts are coming into cover. They're pushing price higher. You can see that very clearly on a half-hour candle chart. And yeah, we're just kind of creeping higher and higher and higher. You know, we have our all-time highs here where that double top is. I don't know if we'll get there today, but at least we can get up into this area. If this keeps happening, there should be some resistance here at 67.28. There's some single prints. And so we're just going to creep higher, creep higher. Just go with. I'm going to show you something on the next chart. We will get an inventory correction, maybe when London opens. I don't know, right? So here's the thing. We had an inventory correction in J period. J period in market profile usually corrects inventory in RTH and also in whatchamacallit, Globex. So J period actually came down. It took out the I period low, dropped out some of that long inventory, flushed it into wholesale hands, but the shorts came barreling in the door and pushed price right back up. Now, it's interesting. I was thinking about that, and I was thinking, this inventory correction we have here, where you had, the market was at a high, and then it dropped, and then went right back to a new all-time high for the night, right? A new nightly high. That in a microcosm on a 1 minute chart is exactly what's been happening since COVID, right? Now, I don't know when it's going to end, but I know how it will end. It will end if one of the large Mag 7 companies has accounting fraud or something really goes wrong, or if they raise interest rates, or if some huge macro change happens, like, maybe BlackRock has accounting fraud and $11 trillion, poof, vanish. Then something but in other than those extreme instances, the U.S. financial system is quite sound. It can take volatility. They have no problem clearing trades in a 1 day time frame that they tell us. The plumbing underneath the U.S. stock market is sound. So this is something, the perma shorts. Where are my perma shorts? I know there are people who love to short, right? They get a glee from watching something fall. It's the same people who like to throw refrigerators off of buildings. Remember on David Letterman, they used to have that thing where they'd throw stuff off a building like TV sets, bowling balls, right? Those are the same people who like to short. They like to see stuff fall apart, right? And that's okay. There's nothing wrong with that, right? All I'm saying is you should know when to short and when not to short. So the market has limited supply. The supply is locked up because we're in an asset gathering revenue generation model, right? Now say that over 6 times really fast. We are in an asset gathering revenue generation model for US capital markets, which means people make their money by hoarding assets and getting paid a percentage of the hoard. Pretty simple. So without any reason to sell a billion shares of Apple, right? There's no reason to sell it, so they just keep holding it for 20, 30 years, right? They've got trillions of dollars. The market is paid for these positions in cash. So they're not subject to margin call like all the nudniks who trade on margin. They flush them out. They flushed them out in COVID. They flushed them out when President Trump had his day of reckoning or whatever the hell it was, Terminator 2 Judgment Day. That's another flush. Flush out all the people who bought stock on credit, put it into the hands of the heavy duty players, rail it right back up again, brand new highs every time this market liquidates. It happens on a short-term 1 minute chart, so now you can understand why it happens, right? That's what happens when supply is restricted. You should know this as a trader. Otherwise, you're always going to be shorting and always getting stopped out and always getting frustrated and always screaming like a 3-year-old that it's too high and you want your binky, right? So now you know how markets work. Trade accordingly, right? Don't try to be selling sunscreen in Saskatchewan when it's minus 45, right? It's like trying to sell vegan food at a gun convention. Here we go, another new high, and we're just creeping. I'm seeing how well the levels are working, right? Right? Shorting a market that has limited supply is trying to sell vegan food at a gun convention in North Dakota. You're not going to do that well. Yeah, the rainbow driving, right, Cisco? Exactly. Hey, Brad, how are you? Log 16 is beautiful. Let's see if we can push it up past 24. We're creeping on the 24s. We're just creeping. I used a distribution balance. We dipped underneath it, found bids, and then straight back up. So it's the end of the quarter, right? The hustlers need to get paid, folks. The hustlers are the portfolio managers, the traders, everyone who gets paid on performance. What would have been your balance zone before 545? That's why I used that balance zone. It's hard because it was maybe there, but it's tiny. Right here. I would use the balance zone from Friday, probably. Right here. Trending markets are hard to find a balance zone. Trending markets are a real pain. Total pain. Yeah, Cisco, I'm looking at this house in Hawaii. Oh, man. Oh, man, I'm telling you. Soon. I'm hoping to retire there. Yeah, Friday zones will work just as well. It's all the same inventory, right? So that's why I like to redo my zones every morning, Mother Truck, because what it does is it gets me into a routine, you know? And I'm a routine guy. I need a routine because I have no discipline. So having a routine forces me to be disciplined. Otherwise, I'm a shoot from the hip, let it go, let's try this, who cares? You can't do that in retail trading, right? Yeah, Mike, you're there too. What? You guys both live in Hawaii, Kai, right? This house is in Wailea, which is before you guys. Keep having dreams about Hawaii. It made an impression on my brain when I grew up there in the 80s. Should have never left. But then I would have never been a trader. I would have been a beach bum. 67.24. The funny thing is, during the market crash of 87, we were all sitting there watching TV at the Shorebird. I don't know if the Shorebird still exists, but if you guys had been there for a while, you know why we were living there. 24, is it going to hold? Is it going to give any kind of a response? It's kind of stuck. And we were like, why are these people all stressed out in New York? Next thing you know, I'm in the middle of it 10 years later. It's gone? Uh, wasn't the most politically correct restaurant, I guess. Okay, into a new zone, folks. Into the wild blue yonder. Those single prints are at 67, 28 and 3/4. I do not see a short yet, my friends. So those of you who are shorting and adding and shorting and adding, you got 13 minutes. Maybe you might get some relief when London opens. I can't guarantee it though. Let me just make sure I've got those single prints in the right area. 28 and 3/4 to 31. There should be some supply up here. There is a stop up here that you will have to get by that gatekeeper. You see, what's going on now? It's just getting bought in. It creeps up, it trips a buy stop, and it gets bought in, and then it goes back down. Then another buyer comes in, and it creeps up, it trips a buy stop, and they get bought in. That's what's going on right now, because today is month end, so you either have to buy yourself in today, or you have to put up capital, and nobody wants to put up capital to hold a short going into the end of the month, end of the quarter. Leaping lizards. The stops all the way to the all-time high. So now you know where you are. All right. Look above and fail of 24. All right. It's a hot one now. Let's see. Where do we, if you are, I don't even have my other instance of Sierra open here. So let me open that up. So say you're shorting. You short 23.5. Put your stop at that high, right? Use that 24/4, 24.5. What is it? 24.5, right? Go 24.5 on the stop. There's no reason to spend a lot of money on a short here if you are shorting it, right? Because it's a look above and fail of 24. But it's not a look above and fail that I would invest a lot of money in. AZS, if you tend to lose money at the end of the month, and a lot of traders do, take the day off. Be lazy. Right? You've worked hard. You've been here every morning, right? Nothing wrong with a day off. Here's the thing with me. Mondays, I usually have weekend brain. I'm still in weekend mode, right? And so it takes me longer to kind of dial in, right? I can analyze things well. I've done that already, right? But how good is my execution? Well, I need something that's executable for me to test it on. And I don't know. I hesitate. I didn't even have my trading software open. So there's the look above and fail of 24. If I was short 23.5, I'd have to go put some bids down here at 22.5 and see if I could get filled. If the market reclaims 24, I really don't know if I want to be short, right? So, like, there's, if you can hear my voice, the level of commitment to that business transaction is zero, right? So I'd rather sit and wait. And I don't mind sitting and waiting. And there, see the offers moving higher over 24. Nothing for sale. So that pullback was a 3-minute backfill. Let's see, we need an aggressive seller, and right now there is no aggressive seller. You know, that's the nice thing, Mike, about just trading one market, right? A lot of people ask me why I only trade ES. That's so I can concentrate. And like I said, I'm not a disciplined person by nature, so I have to force myself to be disciplined. So routine is a huge part of that. And concentration. So I can just concentrate on one thing. Yeah, sure. Sometimes ES is horrible to trade, right? Because there's no order flow, there's a short squeeze. And what we've had 28 all-time highs in the S&P this year. That's crazy, right? So if you folks, here's the thing, if you folks have had a tough couple of months or even a tough year trading, don't feel bad. It's very The skill required to trade a market that has 28 all-time highs in a year is a level of skill which is beyond even some intermediate traders, right? Professional traders, experts, people who are very skilled even have a hard time trading this market. Don't feel bad, right? Technically, it's a very difficult market to trade. It changes weekly. The agenda is always changing. It's run by speculators. The ranges are huge. It's a great time to learn, right? Like, say you were a mechanic, you would be learning how to rebuild the engine of a Lamborghini instead of a Chevy 350. You know what I mean? That's what this market is. It's a complex market, and it doesn't act like normal markets have, right? And especially people, how many of you come from the penny stock world of trading penny stocks? And when you're shorting, how penny stocks just completely fall apart, right? They go up and then they just fall apart, right? You see that happen all the time because there's liquidation, there's dilution. Trading a market where there is no dilution is very different than trading a market that is diluting constantly. Do you guys understand that? Anyone? Yes? No? Maybe? Right? It's very different. The mechanics of the market are completely different, right? When there's no dilution, there's nobody selling. Markets are also created to sell. This market doesn't sell off. It gets marked up because asset managers, assets under, oh yeah, any stock, Mike, under like $20. Now, big companies like Tesla and things like that, there's dilution in those companies, but there's massive institutional interest in them, right? I'm talking, stuff where it trades like it'll be up 500% or 300% in a day, and it pumps, and then 2 days later it's gone. Like it'll go from 50 cents to $5 and then back down to 50 cents. But in the meantime, somebody's pulled 300-400 million dollars out of the market. So I used to run deals like that, right? I was the executing trader for those kinds of stocks. That's why I know them so well. And I would engineer those manipulations for the client, right? I'm kind of like the concierge of the penny stock world. What do you need to do? You need a securities lawyer, you need a market maker, you need a transfer agent, you need to remove a chill on a stock, you need, what do you need? Come to JJ. You need a place in Switzerland to hide. Yeah, you need a place in Switzerland to hide a short position for a year. I'm your boy, right? That's what I used to do, right? Very different world than trading retail. And so when I came into retail, I shorted everything. I mean, I was like, oh yeah, short, short. Whoa, that didn't work. Took me a while to figure out they don't sell this crap. All right, here we go. Let's try a short now. A little inventory correction, right? 23 quarter, 23 half. Let's put some offers out. I'll go 24 half on the stop, maybe 24 quarter, right? And I'm short one at 23 half. I'm going to go put in a bid at 22. Let's see if I can get some love down at 22. Where the K period took the J high here, there are going to be bids here. Okay? Because the shorts are trapped underneath 21 half. So let's see if they come for it hot and heavy, or whether or not I can actually creep down and get a 22 fill. You know, I might go 22 a quarter. Let's go 22 quarter. Now, if my entry price is 23 and a quarter, so if it starts creeping over 24, I'm gone. Hiding a short position is not a crime, especially before Reg SHO. It was completely normal. Happened all the time. So I'm bid 22 quarter. I'm short 23 quarter. I got hit at 22 quarter. Okay, so I shorted the backfill, right? That was a test trade. I just used one micro because I'm, not really with it. So that's the look above and fail trade. Now, let's see where that green line I drew at 21 quarter. There should be some responsive buying. There should be some bids down there. So when the market gets down to that 21 and a quarter level, the offer should start lifting. Yeah. Yeah, most of those penny stocks, you're right, Cisco, if they have any cash at all. One thing about penny stocks is as soon as you give a penny stock CEO any kind of money, it's gone. Small cap penny stock, most CEOs go through cash like poop through a goose. See, there's 21 and a quarter. Bid, lift the offer. Lift, right? Take and bid, take and bid. Should be a seller just here at 22 and three quarters. Let's see how aggressive they are. If the seller is aggressive, we'll break 21. See? See how it went down to 21 and the offer lifted. So the seller is not aggressive. See, you can tell the difference between an aggressive seller and a non-aggressive seller. You need to know that as a short seller, because if you're shorting an aggressive seller, you can continue to stay short. If you see that your sellers are not aggressive, well, then you have to govern yourselves accordingly, right? And get ready to cover. Watch. Oh, they're going to break the stop. Does that bring in buyers? Does that bring in sellers? Because if we have an aggressive seller, we'll take it down to 19 and a quarter now. There you go. Come on. Bang it down. What we're doing is we're looking for the bid. Now, if we can't get down to 19 and a quarter, it'll pop back up over 21 and a quarter. So if I was short another couple of contracts, I would have put my bids down here. and covered for a couple of points. There, I'd be done. I'd be gone by now. I'd be gone by 20 and a quarter. 23 to 20 and a quarter, perfectly fine, right? Now, Jerry, let's see. Do we find a bid somewhere? Remember the J-Lo bid at 15 pretty decently, right? Now, has that bid moved up to 19 or is it between 15 and 19? Right? So if you learn how to think tactically, right? The last time the bid was here, has that bid crept up? And is it strong here like it was here? Or are they going to let it drop back down to 15? Look how it front ran that K low. L period could not take the low of K, right? That is significant if that holds true for the next couple of minutes. Watch. If it can't take out that low, we will creep back over 21 and a quarter. Come on, take it out. Come on, come on, come on, come on, come on, come on. Break 19. We need a break of 19. And it's not because I'm short right now or I'm short biased. I just want some selling, which will give you guys better order flow, better price action. It should break. Unless someone's really short. There, it broke. Now our point of control for the night is all the way down here at 10 and 3/4, 10 half. We'd like to see that move up here somewhere. Good distribution, right? So does you see the time point of control is here? The volume hasn't moved up. We need another couple of hundred contracts here in the 18s to move that up. That was actually a decent look above and fail, eh, guys? Look. Look above and fail, and it went right to the target. So 24 down to 19. Beautiful. Beautiful. Cool. And that is how you want to short these kind of markets, right? You want to short them tactically where you know there's a seller, right? You saw there's a seller under 24. Great. Let's sell next to that seller. Little look below and fail of 19. Should take us back up to just under 21. And if not, back down under 19. Oh, there's a seller. Now we're looking for the seller, and they are at 20 right now. Well, that's okay. Let them work this out. They'll probably move the point of control here somewhere. Huh. Back down to 16.5. And that's okay. I'm here. Sorry, I went quiet for a bit. We got sucked into the price action. It's like, I'm waiting for that point of control to move up. Maybe 17 and 3/4. Just need another 21 contracts at 17 and 3/4 to move it up. Monday morning brain, AZS. Do you? Yours moved up a little quicker than mine. There it is. 18. Hey, Harbuck, how you doing? Remember, folks, take it nice and easy today. It's month end. Just relax. Sit back and count your money. Be a snob when it comes to taking trades, right? You want to be a price action snob. One trade here, one trade there. Okay. Probably go a little sideways here. Probably a little sideways action. Yeah, bid crept up just a little bit. Couple of points, right? Yeah. What I like to do, especially on month end, it's just me. Um, I like to sit and watch where these bids are and everything. And then, of course, it's very interesting to note that are those bids going to be there um, on Wednesday, right? Because month end, quarter end, oftentimes the markets get marked up wildly. So that's what I'm kind of wondering. That's why I didn't do a weekend update video on Sunday. I just kind of want to see where everything closes. Look below and fail of 19. Let's see if we can get past 20 and a half. Like that's where we got stopped last time, right? Let's see if we can go up here to 21. No, those sellers are still here. Look, see? Can we get a print? Come on. Give me a half print. Give me a 3/4 print. Come on, come on, come on. There we go. There's a 3/4 print. There's 21. See, if you mark off where the sellers were before, you know where they're going to be again. Now, people ask me why that happens. Well, if I sold here, right, an hour ago, why wouldn't I sell there again? It's a good spot to sell. Because you got to think size, right? See, and that's another thing. We don't get to trade size, so we don't think in terms of size. So when you think in terms of size, why wouldn't you sell there? Because someone else sure as heck's going to, so you better, right? If you've got size and you're not selling, well, you're not turning your inventory into cash, right? If you're not turning your inventory into cash, the only reason that they're going to lift Moran is exactly that, because they see buyers, then they'll take advantage of that. But if they don't see buyers, they'll hammer it there, right? See, the thing is, because even if you don't have clients, right, your goal as a trader is to take that inventory and turn it into cash. And whether or not you sell 1,000 contracts, one tick lower, you don't care. Because, I mean, your cost basis is down here, right? Just good to know. Good to know. Let's see. Hmm. Now it gets boring. Now it gets really boring unless somebody got really short on that pullback. Any questions? It's okay, Jerry. We got today and tomorrow. Just be smart today and tomorrow. Well, be smart all the time. But you know, then we've got the whole week, fresh month, fresh quarter. I think this next quarter is going to be extremely challenging to trade, but I also think it's going to be extremely profitable if you all you got to do is just follow the rules. I really, really think that, you know, if you follow the rules, follow your setup, don't get carried away on risk, you know. CAs, yes. Have a good one. You ready to sign out? Okay, let's call it. I appreciate that, Mike. So try to keep the initial buyer or seller in mind to try and find. Don't worry about the buyers, Alexander. Focus on thinking like a seller. Think like a distributor, right? So the distributors set the price according to the customers that come in, right? The sellers have size, right? And we are always distributing, right? So if you kind of keep that in mind, always think, what would I do if I had 5,000 contracts and I have to compete with 1,000 other sellers? But at nighttime, I only have to compete with maybe 100. See, that's why nighttime, how price is wildly out of range. We're up 24 points. That's because there's less selling competition, right? And anyone who was long on Friday and Thursday, they can happily ease out of their position a little bit and go to cash before the end of the month, right? Exactly. Okay, folks, I'll let you guys go a little early. Come visit us at the Trading Syndicate. If you're tired of losing money doing this, if you're tired of getting stopped out and being in the wrong place at the wrong time, come spend a month with us. This week, on the first, I will do on Wednesday, I'll do a 101 and I'll start doing more in the room sessions for folks who are in the room. We'll do one-on-one, we'll do equities. Got a lot of stuff planned for the next quarter. We'll be doing a lot more how to trade stocks like a market maker, right? How to trade stocks like an insider, how to think like an insider. We're going to be doing a lot of that. So come check us out. We'll be happy to show you how to make sense of this insane business that we know and love. And we will see you at 9:30. Thanks, everyone. Appreciate you guys and ladies. See you in a few hours. Bye for now.